No, I mean, I'm just trying to do nothing. The one thing I've been observing is stuff like the ETH Bitcoin cross. ETH got into the total hate zone, which always gets interesting to me. And then the ETH Bitcoin cross starts breaking higher, bounce right off the bottom of the range. I'm interested in that because that's the start of altcoin season in its truest form. So if it breaks a bit higher than here, we can see why that will happen now, because the ETF, it's been delayed a bit, but we saw it with Bitcoin. The run starts well before the launch. So that then recycles capital up the risk curve, and that's banana zone. So for me, the focus is the banana zone, trying to get that right, because that's where you can make a lot of money. So you kind of have to focus, even if you're not doing anything. You just, you don't want to lose your coins, because that's the most painful part of losing it, is in the banana zone. Just hold on to your coins, and also don't fuck it up by owning the wrong stuff, getting way out the risk curve, and you're left with the whole middle of the crypto market rallies, and you're so far out the risk curve in some weird political token from South Korea that you miss out on the entire rally, which I've seen. Or you're still stuck in the last narrative. You're stuck in, one of the big layer ones from 3 cycles ago, thinking it's definitely going to come back this time.
Wait a minute, everyone. We all agree that the crypto market never sleeps, but with countless newsletters out there, how do you choose the best one for you? BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge. In today's video, Arthur Hayes and Raoul Pal talk about why crypto is the largest wealth-generating machine humanity has ever been given. They'd also give their opinion about meme coins, whether they will last to the next cycle, and whether they are good to invest in or not. So without wasting any time, let's dive into the video.
Aptos flips Solana in the layer 1 game. I'll put that out there. I'm not going to say any more than that. And I'm a little teased.
So I've got variant perception there because I'm on the foundation of SUI. So we'll go with Move is something. The Move protocol, I think that's a big narrative to come. I'm just really interested in this next round of the big layer ones, and there's a few in that game that are interesting. And so let's see, because that's a really profitable part of the banana zone, is this next trade. That trade, that was enormous money-making trade last time and the cycle before. So it will be again this time. Most of these tokens they picked up from the lows. They all launched kind of at the wrong point in the cycle, stuff like that. So it's quite a good setup for some of these. I don't know, you could probably throw Celestia, Monad. Monad might come a bit late in the cycle. There's a few that's around that could be part of this bigger narrative. Let's see.
Comparing Bitcoin's compound annual growth rate with the returns achieved by Warren Buffett's portfolio, with its top holdings being Apple, Bank of America, American Express, Coca-Cola, and Chevron Corp., shows starkly different risk-reward profiles and performance over varying timeframes. For instance, according to the data resource Lazy Portfolio ETF, Warren Buffett's portfolio has obtained a 10.03% TAGR with a 13.67% standard deviation in the last 30 years. In comparison, United States company stock portfolios have more or less offered similar returns, but with a higher standard deviation. By comparison, Bitcoin's performance has been nothing short of extraordinary. Since its trading debut in 2011, Bitcoin has delivered a staggering average annual return of around 104%. This figure easily beats the returns of Buffett's and U.S. stock portfolios every year, on average, over the past 13 years. Bitcoin's KGR is also much higher than its safe haven rival, gold, which has returned an average of 6% annually in the same period. This shows that while U.S. stock portfolios have achieved a comparable CAGR to the Buffett portfolio, its higher volatility, might make it unsuitable for risk-averse investors. Gold, with its modest 6% average annual return over the past decade, offers relative stability and acts as a hedge against economic downturns. Many traders and investors regard Bitcoin as digital gold, viewing it as a hedge against inflation and currency devaluation. This perception has enhanced its appeal as an asset over the years. Notably, several U.S. companies, such as MicroStrategy and Tesla, have added Bitcoin to their reserves, followed by the launch of spot Bitcoin exchange-traded funds, ETF, that have further solidified its status among institutional investors. That said, Bitcoin remains highly volatile, with its price subject to extreme fluctuations when compared to the stable returns of Buffett's portfolio. In recent years, however, Bitcoin has exhibited lower volatility than many S&P 500 stocks, including Tesla, Meta, and Nvidia. The Buffett portfolio represents a more conservative, long-term strategy with consistent returns and manageable risk, even though it has exposure to a pro-crypto neobank in new holdings. In contrast, Bitcoin has provided much higher returns, albeit with significant volatility and several big downturns over the past 13 years.
Yeah, and part of that is, if there's any volatility, maybe one of those two drops out. There's violence is obviously likely to happen at some point in this, just because of how divided the society is. But when you narrow everything down, the outcome for everything is printing money. So the worse anything happens in the US, the more likely they are to print money. So election years tend to be very, very positive, and the year after for risk assets, just because everybody's buying votes and then kind of proving themselves afterwards and mocking up the pieces and paying that interest on the debt. So there's that military side. You've then got all the retirees who are the baby boomers with all the votes. Well, they want their health care. And then the third part of the equation is somebody needs to pay the interest on the debt. And the only way of doing this is the magic money printer. You can see there's a shortage of dollars around the world, right? We lost US banks. We lost a giant Swiss bank. We're losing dollar yen, right? That's a shortage of dollars. And we've got Yellen going to China twice, right? She's there because her other job outside of getting Joe elected is to sell bonds. She's the Mike Milken selling junk bonds, going to China doing the roadshow. China's like, yeah, we'd love to buy your bonds, but we don't have any dollars. So you give us dollars and we'll buy bonds. So they have to figure out how that can be done. Now, nobody really wants to give China direct swap lines. They probably do it through Japanese bond intervention, by currency intervention. Either way, the G20's coming up or G7's coming up. There'll be some magical allowance for everybody to have enough dollars for the system to move forward and everything to happen. So there has been no independence since 2008. I don't think there's much independence between central banks either. I think the BOJ kind of taught everybody the trick. Everybody's followed suit. They've all got the same problems, which is the debt and the aging populations, and everybody plays the same card. And there's, the BOJ and the MOF, that they stopped being independent in the 90s, even though on paper they are. And so it is all driven by the Treasury and required to refinance this debt since 2008.
Billionaire Elon Musk has threatened to ban Apple devices at his companies should Apple integrate OpenAI's ChatGPT into its iPhone, iPad, and Mac operating systems. If Apple integrates OpenAI at the OS level, then Apple devices will be banned at my companies. That is an unacceptable security violation, Musk stressed in a June 10X post. Musk even suggested that visitors to Tesla, SpaceX, and other companies he runs would need to have their Apple devices stored in a Faraday cage upon entry. During Apple's 2024 Worldwide Developers Conference on June 10, the tech giant revealed Apple Intelligence, a suite of new generative artificial intelligence features, which will be rolled out to iOS 18, iPadOS 18, and macOS Sequoia later in 2024. One feature will enable Apple's voice assistant, Siri, to relay user questions to ChatGPT when necessary. Users are asked before any questions are sent to ChatGPT, along with any documents or photos, and Siri then presents the answer directly. The feature would be powered by GPT-4o, OpenAI's latest iteration of ChatGPT. But Musk said it is patently absurd that Apple isn't smart enough to make their own AI, and suggested it would be doing its customers a disservice by outsourcing privacy and security. They're selling you down the river. Apple, using the words "protect your privacy," while handing your data over to a third-party AI that they don't understand and can't themselves create is asterisk, not asterisk protecting privacy at all, Musk said in another X post. But Musk didn't provide details of the privacy protections embedded into the OpenAI integration, and as a result, his X post triggered the reader's added context feature. It provided a link to Apple's press statement explaining that user IP addresses would remain obscured and that OpenAI would not store requests. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.